Infrastructure development is no doubt one of the key drivers for progress across the African continent and a critical enabler for productivity and sustainable economic growth. Despite collective efforts, Africa still faces an infrastructure financing gap of $68 to $108 billion annually, a development that has significantly halted human development, poverty reduction, and the attainment of sustainable development goals in the continent. However, the African Development Bank has sought for more private sector contributions to facilitate critical and developing bankable infrastructure projects, given the increment in the funds injected by the banking sector to the rail sector to sustain growth and economic recovery. I introduced him earlier. He's also joining me via Zoom. He's the Chief Executive Officer of Cowrie Asset Management Limited, Mr. Johnson Chukwu. Good afternoon, sir, and happy celebrations to you all.
Good afternoon to you. Barika Salah to all our Muslim friends and brothers, as well as sisters.
All right.
And thank you for having me.
All right. Thank you so much. I appreciate your time. Now, Afdb puts this at infrastructure deficit at about between $68 billion to $108 billion annually. A lot of figures, of course, around infrastructure. But my question would be, most times we talk about bankable projects. We don't just invest in all of the projects. So how do we bridge infrastructure gap when we continue to look for the bankable ones or the one that we can get returns from? How do we balance it up?
I think I'll take from what African Development Bank said in their report, in that presentation by Dr. Adeshino. He said that one of the challenges you have is taking bankable commercial projects to a financial closure. And basically what happens is that you have a lot of projects that are bankable, which means that investors would be willing to put their money on those projects. But the issues are the projects are not structured in such a way that the investors can see through the viability of the project as to put their money. So when you talk of bankability, the first thing you have to look at is what he emphasized in his report, that we need to get the project preparation facilities in place. What that means is that you need to get the consultants that have the capacity to prepare the outline business case and the full business case for these commercially viable projects, so that the investors can bid for them, because they can now see through, based on this outline business case and fully business case, that this project has good returns, can pay back itself over a period of time, and is secure. So the critical challenge we have is that we have a lot of projects that are bankable, but the government is not able to put it in such format as to make them attractive to investors. So if we address that, you will realize that a lot of funds will come into projects that are already in existence, but are not being funded because they are not presented in a way that are attractive.
Beautiful stuff. Now, Mr. Chukwu, institutional investors like the pension fund managers, sovereign wealth funds, insurance companies, many will say that we can tap resources from this end to build infrastructure. But on the other hand, some will say, do you think we can? Do you think we should support this? What do you think about getting resources from investors like this?
In the first place, the investors you mentioned are what we call, what they manage is what they call patient capital. They are ready to go for the long haul. Take, for instance, the insurance companies. The insurance companies have a lot of reserves that are there for a very long period of time. They don't need a cash injection. They don't need to have immediate payback. Similarly, pension fund administrators, PFAs, also have patient capital, as well as the sovereign investment authorities. So the key thing is that these funding outlets are available. They are ready to bring their money, but you need to bring projects to them that they can invest in. Because if you don't have the projects, they can't put their money in. If you take, for instance, the PFAs in the country, they have over 13 trillion naira in funds under management. If you look at the Sovereign Investment Authority of Nigeria, beyond its own resources, it's also willing to attract other funders to come and co-invest with it, which is why we're having the current infrastructure fund that the government has set up, about the 15 trillion naira that the government is setting up with a sovereign investment authority and the central bank. So the key thing is that these patient capital sources are available, some of them locally, some of them beyond even our own local environment. You can attract other national sovereign investment authorities to invest in our own infrastructure. But the key, we must get the project viability right, which is what we spoke earlier, which is about bankability. Once you get that right, then you're likely going to see a lot of funds coming. I mean, we have proof of concepts. When we liberalized the telecommunication sector, we got three or so investors that brought in $285 million to get a license. We just issued 5G licenses. We have companies that are paid for it. So the key thing is that the infrastructure gap is there. Are you able to put it in a bankable format? And then are you going to advertise to the global investment community? Then you have to also look at internally what you need to do right. Do we have the appropriate legal framework? Do we have the appropriate regulatory framework? In the case of the proof of concept I mentioned, we had NCC that was brought in as a regulator for the telecommunication sector, and that helped to bring in capital into that sector. We can replicate that in several sectors. We can have already government is doing something on road infrastructure. We can strengthen that. We can also do the same thing when it comes to other transport infrastructure facilities like rail lines, as well as the ocean-going transport system by improving on the receptacles, that is the seaports.
Interesting, but we talk very much also about public-private partnership. It's very, in this part of the world, we mention it almost every time. We need public-private partnership to execute some of these major projects. But, Mr. Johnson, do we have the right policy, legal, regulatory environment to support PPP investments across the African continent?
I don't think we do. If you cast your mind back to some of our attempts to have public-private partnership investment into critical infrastructure, one case is the Lagos MM2 airport. The issues are still there. I don't think they've been fully resolved. Then you have the Lekki highway, which was concessioned and then bought back by the Lagos state government. And then you had the second Niger bridge, which was concessioned and bought back by the federal government. So we really have not had a proper proof of concept in public-private partnership that has been seen through and has succeeded and possibly cycled out. So we need to look at our legal framework. We need to look at the regulatory framework. We have ICRC, which is supposed to be the regulatory organ of government when it comes to identifying and approving infrastructural investment by private sector. But like I said, we really still don't have a conclusive proof of concept. We need to go back and look at our legal framework. We need to look at our regulatory framework. We need to have a very strong regulatory environment to incentivize private sector to invest in infrastructure. We need to have respect the laws or regulations that are guide underpin some of the private sector investment in infrastructure, so that no government can come in and just cancel it. And where that is an option, then there must be a buyback option. The buyback option must be punitive enough that the government should think of wasting public resources to buy back a working public infrastructure.
Let's talk about Infracom. Mr. Johnson, what are your expectations? I think they have a CEO now. The CBN has inaugurated. A lot of work is going on around that. But what do you think, Infracom? What positives will they bring to the Nigeria's infrastructure space?
No, we're talking about 15 trillion naira of investment in infrastructure that the Infracom is supposed to attract. I think the central bank has already put down its own equity contribution. The Sovereign Investment Authority is part of the prime promoters of the project or the fund. I think the next most important thing is to bring in, attract other funders into that Infracom, which means you should be able to attract other sovereign investment authority investors. We should be able to attract global insurance companies. We should be able to attract private equity funds. That's the only way you can achieve the 15 trillion naira. But if we do achieve that, it will provide us a lot of relief. I mean, what Dr. Adesina said, that we need about 68 to 108 billion dollars investment in infrastructure annually, which means if we can have the Infracom raise about 15 trillion naira, we would to a large extent be closing that gap. The key thing is that we also must have the deals in the effective or bankable deals in the pipeline, which is a core of having Infracom work. We must have a respected legal framework that will govern private sector investment in infrastructure for them to even attract capital to co-invest with them. If we have that and we have the deals in the pipeline, those deals must go through some level of what you call preparation, financial preparation, which I had mentioned earlier. You must have, at the beginning, you must have the outline business case, which will show a justification that the project is viable and bankable. And then when you have investors bid for it and win, you can prepare the full business case. If we go through these things, I'm clear in my mind that we should have impactful effect or contribution from Infracom.
Mr. Johnson, interesting conversation, but let's move to the banking space now and talk a little bit around bank credit in Nigeria. Private sector increases about 1.18 trillion just in a short while as at March 2022. What does this mean for both sides, the private sector that are getting these loans and the banking space?
Yes, you can actually see this in the performance of the economy in the last quarter, last reported quarter, which was the fourth quarter. Granted, these figures are figures for the first quarter of this year. And what that means that the economy is opening up, private sector is accessing credit. Of course, moving from a 35.19 trillion to a 35.37 trillion naira within 3 months, an increase of about 1.18 trillion naira. It's quite impressive given the fact that the economy was, until not too far ago, was in a recession. So investors or private sector operators are actually accessing credit from the banks. And I think the forbearance the central bank has extended also is also helping matters, so that the banks are not running over customers for non-performing loans. They are ready to grant them some level of accommodation to allow them run their businesses and make money to be able to pay their loans. So that's one factor. The other factor you also have to recognize that the government is still a dominant player in the credit market. The private sector credit was only about 28% of total credits extended in the first quarter of this year. Total credits extended was about 4.17 trillion naira, of which the private sector only got 1.18 trillion naira, just about 28.2%, while as public sector got 2.99 trillion naira, which means public sector accounted for about 72% of the credit that was extended to in the first quarter of this year. So we still have a public sector dominance, which it's not too good for the economy.
Currency in circulation also declined slightly to 75.56 billion naira in Q1 of 2022. And in all of this, will this help as we move towards an election year? What impact will this have? Are we likely to see more money? And if that happens, what's the implication, Mr. Chukwu, in your assessment?
You know, when you talk of currency circulation declining, there are a lot of factors are contributing to that. One, a lot of transactions are now going virtual. So there's no need for people to access currencies in any form. So you have electronic payment, electronic receipt of funds, and that has reduced the need for cash or the currencies, even in terms of banknotes. So when you have higher velocity, then it compensates for a decline in currency circulation, because what we're seeing is higher transaction volumes going on through the future platforms. As elections approach, that might reverse, because unfortunately for Nigeria, we are still dealing with a situation where some of the election-related disbursements must go through cash. The polling agents, the campaign agents, a lot of times they are now paid. They are paid in cash. Particularly the campaign agents, the crowd that follow the politicians around are also incentivized in cash. The politicians now go and buy some food stuff and stuff like that, and a lot of payments are made in cash. And you also have to deal with the under the table payment that take place pre or during election periods. So you may see a reversal maybe towards the end of the year, or in fact, the second quarter, because you are going to see the parties hold their primaries. And between you and I, we all know what happens, or we have heard, even if we are not sure, of what happens at the party primaries. So you may see an increase in the level of money in circulation just towards the end of this quarter.
Indeed, we hear all of this, like you said, Mr. Chukwu. Before I let you go, finally, really interested talking to you this Monday, and it's a public holiday. A lot of knowledge being shared here. MPC will have to look at all of this, particularly how they can stabilize the economy and all of that. Do you think any of these figures or what's popping up at the moment would shape their decision as we expect them to meet anytime, the next meeting?
Yes, absolutely. The macroeconomic variables will certainly affect the decisions, will shape the decisions of the Monetary Policy Committee. Factors like inflation rates, we saw inflation at I think 15.92% in the month of March. That has been a two months increase. We had about 15.6%. And then we moved to 16 in January, 15.7% in February, and then 15.92% in March. And the pressures are still on. So that would be a factor to consider. We have talked about the state credit expansion to the private sector, which means we should expect stronger economic growth. IMF is already projecting the Nigerian economy will grow by 3.4% in 2022. So the Monetary Policy Committee will look at how do we encourage growth to be sustained, at the same time moderate current trend in inflation. These are factors that must be taken into account in arriving at whatever decision they will take.
Let's leave it at that. Chief Executive Officer, Kari Assets Management Limited. Thank you so much, Mr. Johnson Chukwu. Thank you. Really appreciate this. Enjoy the rest of your day.
My pleasure.